Yeah, family, what's going on, guys? What is up? What is up? What is going on, family? Welcome to tonight's session, tonight's stream with the one and only your boy Abel. Super excited to be here with every single one of y'all. Shout out to every single one of y'all that's in the chat already, family, waiting to go ahead and get this value, get this sauce, get this information. Let's see who we got in the house today. We got Vermont in the building, Louisiana present and accounted for. Shout out to you, Z. I appreciate you. What's up? All right, let's see what else we got in the building. We got Chicago plugging in. What's going on? How are you doing out there in Chicago? Las Vegas in the building. New York in the effing building. I see you, Castro. What's going on? We got Yusuf from Phoenix in the house. We got Cleveland in the building. Brother O from Philly in the house. What's going on, Brother O? Good to see you in the Chizzy chat. All right, let's see who else we got here, guys. We got Pittsburgh in the house. Money Mike, I see you, dog. Guys, go ahead and Will Smith that like button for your boy. All right, definitely go ahead and smash that like button so that we can go ahead and get this video out to a lot more people. Right, let everybody know that Abel is live and that we're going to go ahead and provide massive value tonight. So go ahead and Will Smith that button like Money Mike says. Definitely appreciate you for tuning in, my brother. I appreciate that. We got the boy Skaggs in the building tonight with us as usual. Right, we got that 202 in the house, DC, DMV area in the building. B Moore, what's up? Baltimore, Maryland in the house. Tony, what's going on? How are you doing? We got Asheville, North Carolina on the check-ins. New Orleans, the Bahamas as well. Columbus. I see you guys out there in Columbus. What's going on, family? Welcome to tonight's stream, tonight's session. Super excited to be here with every single one of you guys. Because like I always say, family, this is something that I actually get a lot of excitement for, right? Actually coming to these streams, coming to these sessions, and actually just being able to have a conversation with you guys is something that I truly enjoy doing. Just conversating back and forth. Obviously, I'm technically the one that's providing massive value, but I also vibe off of the questions, comments, and concerns that you guys also go ahead and pretty much drop in the chat, right? So I appreciate every single one of you guys that do actually engage, guys, with the community, engage in the chats, because the more questions that you guys ask me, the more comments that you guys throw in the chats, it causes me to really go ahead and improve as a trader, as an educator, as a mentor as well. So I appreciate every single one of y'all that does actually engage in the chat and ask questions, drops comments, drops your concerns, no matter what it is. I appreciate you tremendously from the bottom of my heart, family. But go ahead and smash that like button, family. Go ahead and continue to smash that like button. Let's get these likes up. Right, let's make sure that everybody is definitely smashing that like button for your boy. That's the only thing I really ask of you guys, is just to go ahead and show some love by smashing the like button, so that we can go ahead and get YouTube on our side, and hopefully YouTube expands and throws this video out to a lot more people. But overall, guys, we did have some interesting data for today, or that actually happened earlier today. The main important one is probably going to be this CPI data that was released for the pound overall. They actually did come out higher, guys, which pretty much is, again, that's the trend across the board in almost every economy. We're experiencing high levels of inflation, and it doesn't look like it's slowing down anytime soon. So even for the pound, guys, we actually came out higher than what was actually forecast. They were actually forecasting CPI to come out at 9.3% year over year, and we actually came out at 9.4% year over year. Now, for those of you guys that are newer to the streams, for those of you guys that are newer to this entire session right here and newer to fundamental analysis, guys, CPI is an instrument that measures inflation, right? It measures inflation overall, and this is something that a lot of traders and a lot of investors in the world, guys, are absolutely paying attention to right now. The data that's getting released with this, consumer price index is absolutely important. And yeah, people are hawking over this. People are absolutely being aware of the fact that inflation is absolutely out of control. And, we're trying to see exactly when this thing is possibly finally going to turn around and go ahead and start doing a U-turn for people, right? Because right now, this continuing to increase, guys, for every economy is really not a good thing, right? Typically, you do like to see, right, growth occur in the economy, but you don't want to see, growth happening at such a rapid pace that now is causing inflation. And that's exactly what we're experiencing right now, right? Over the past 2 years, we've seen massive growth occur pretty much through every industry. We're talking about assets. We're talking about price of the cost of pricing goods. We're talking about everything was increasing in value, right? Everything was increasing in price, and that in itself also in return caused the price of inflation, to absolutely continue to skyrocket, guys. So overall, this is pretty much one of the biggest news data, guys, that a lot of traders and a lot of investors are actually paying attention to, because right now, they're making decisions based off sentiment on how this is actually getting released. So it actually came out higher. Like I've been telling you guys, I expect that to possibly continue for almost every economy, right? As of right now, obviously the big thing that a lot of these central banks are doing is raising rates to try to combat that. On top of raising rates, they're also trying to obviously tighten up their balance sheets and tighten up the monetary supply that's out there available right now to try to combat inflation. So there's a few different measures, guys, that these central banks are actually utilizing to try to combat it. But who knows, right? Only time will tell, guys, if those measures are actually going to do something in the near future, right? Because right now, again, I said this a bunch of times, family, but right now I truly believe that a lot of these central banks, have been really dropping the ball, right, and really trying to fight inflation overall, and they're downplaying it so much that now they're putting themselves and us in a very, very tricky situation, very, very tough spot, because now we're obviously dealing with it. It's harder now to get access to cash, right? It's harder now to actually get access, to money, right? Because now it's costing a lot more to actually do it, and the approval and now when you guys want to go ahead and get loans and things like that, guys, now the process of actually getting approved is also going to be a lot more tighter. They're going to be a lot more stricter because of these things, right? So overall, inflation is affecting everybody as a whole. But yeah, CPI is that one reading, that news data, guys, that is really, again, one of the most important ones, guys, that a lot of traders and investors are absolutely paying attention to. literally going on, and we'll continue to pay attention to, throughout the remainder of this year. So let's go ahead and take a look at the pound, guys, and see how the actual data pretty much reacted to that actual release itself, to see if there was anything major that we could have noticed based on that actual release. So that release actually came out at 2 a.m. Eastern Standard Time, right? So we're talking about right here, 2 a.m. Eastern Standard Time right here, right? And we really didn't see anything too crazy. We actually seen the pound itself actually really lose value, right? We actually seen it go ahead and pretty much give us, a bearish push off of that actual data in itself. And that's pretty interesting, right? Because typically what we've been noticing lately is that when CPI numbers actually come out higher than expected, we're seeing the actual currency, give a little boost in itself, right? A little boost in the actual strength of the currency as a whole. But for the pound, we actually seen it actually decrease in value. And that's probably just because, again, another thing that we have to understand, guys, that a lot of these news releases, a lot of this data is typically priced in way before the actual release happens. So the fact that this data actually came out at 9.4%, we could probably come up with a consensus or come up with an idea that it was starting to be priced up or priced in back over here when the market was actually pushing, right? It could have been priced in even back over here when we seen the market actually gain a lot of strength, because at that point back here, guys, a week, 2 weeks ago, that's pretty much when a lot of people start to get a lot of confidence, saying like, yeah, man, this reading is going to come out extremely bullish. So they already started positioning themselves to take advantage of that, right? So it's a lot of ways to look at this, but overall, we really didn't see no crazy of a reaction overall, guys, from the actual release for the pound. But let's go ahead and really look at everything else, guys, and pretty much go in order like we typically always go, and see what we can ultimately come up with going into tonight, going into tomorrow morning, New York session. And yeah, see if there's any opportunities that we could take advantage of. Now, the first thing we're going to take a look at is what I always take a look at first off, and that is going to be looking at the dollar index itself, right? I love looking at the dollar index, guys, just because, again, it's still the currency reserve of the world, and it's just a great tool to utilize to help you understand what all the other currencies are going to do. I don't trade the actual dollar index, but I use it as a reference to give me a heads up on what I can expect other currencies to do, other assets to do, because right now the dollar is still the most dominant currency, the most dominant asset across the board. And if you understand what the most dominant asset or currency is going to do, then that gives you a much better heads up, guys, on what other currencies and what other assets are going to do as well. So overall, guys, what do we actually see, the actual dollar itself, what do we actually see it do, right? I mean, what did I tell you guys yesterday that I expected? Right, and we're going to take a look at EURUSD as well, right? Because EURUSD is definitely something that, again, really played out to the T. But yesterday, guys, when we were looking at the dollar index, I pretty much mentioned to you guys that there's actually a good chance for price to really go ahead and continue going to the downside. In fact, I still think that there is a good chance for the dollar to actually go ahead and continue in this bearish trend that we've been experiencing. I would love to see, guys, price for the dollar to stay weak for now, short term stay weak, right? Again, things might change, but overall, I really want to see price go ahead and get into this area right here, right? This little gap in the market, right? This little gap in the market right here, right? I really do want to see price make its way into that level. I want to see exactly once price does get into that level, I want to see how the market ultimately reacts once it is in that area of imbalance, right? Because what I'm going to be paying attention to, guys, is once we do get down into there, I'm going to be looking for opportunities to go ahead and go bullish the dollar once again, because I'm still extremely bullish, guys, the USD. Sentiment really has not changed at all just yet. And as long as the sentiment does not change, what do we stay with, guys, right? I said this quote a while ago, right? I said this quote a while ago, guys. As long as if the sentiment does not change, then what should we do? Who remembers what I said? Right? Who remembers what I said, family? I see we got Ghana in the building, Louisville in the building. What's going on, JC? How are you doing? We got Dubai in the house. Right? Ike Turner, the like button. I agree with you guys. Go ahead and smash that like button, family. Definitely do me a solid. All right, we got Ohio in the building. My brother G, what's going on? Good to see you. Kenya in the house as well. But remember what I said, guys, right? As long as sentiment in the market does not change, then what do we want to do? All right, I see a lot of you guys saying it. Exactly. Right, and the crazy thing is, everybody that is saying it is a part of the inner circle. I could tell. right? Because their name is green right now, but they're plugging in. So as long as sentiment does not change, we stay with the trend. Point blank period. Let me say that again. Point blank period. If sentiment does not change, we stay with the trend. Okay? It's that simple, guys. So overall, sentiment has not changed overall for the dollar. The dollar is still dominant. As long as inflation is still increasing, then the sentiment is probably still going to remain the same. Now, I know some of you guys, especially anybody that's newer to the call, if you guys are newer to the stream tonight, if this is your first time jumping on the stream, family, then go ahead and drop some threes in the chat, just so that I can go ahead and make sure that I'm not getting too far ahead, right? Because one thing about me as a trader, as an educator, is that I like to make sure that everybody has clarity. Not just everybody that's been tuning in already for a while, but I like to make sure that even the new, I really tailor these type of sessions, family, if you guys haven't really realized, not to all of y'all that have been rocking with me for a minute, even though obviously I do care a lot of you, care for you guys a lot more than everybody else, right? Anybody that supports me for a while, I definitely got a lot of love and respect, and I am doing it technically for you guys, but I always make sure that I structure these sessions, guys, in a way that even the newest person, the newest trader to the stream is actually going to get some value from these streams. That's the biggest thing, right? So when I'm talking about sentiment in the market, and I'm going to keep it very simple for you guys today, right? Very simple as usual. When I'm talking sentiment, guys, right, there's really two types of sentiment that I'm really talking about. Risk on, right? Risk off. Very simple, right? When I'm talking sentiment, I'm usually either speaking risk on or risk off sentiment. Right now, before we even get into breaking down what these are and how we can use them, right, I want to go ahead and just give a massive shout out to everybody that is new to the channel, right? That is new to the streams, right? Those of you guys that actually dropped the 3 in the chat, welcome to the family, brother. Oh, I appreciate you for showing love to all our newest family members, right? That means a lot to me, my brother. I appreciate you. But everybody else, family, let's go ahead and just drop a welcome in the chat for every single one of our newest family members that are in the call with us tonight, right? Because once again, one of my goals here in this YouTube space is to absolutely grow to a point where we're getting thousands of people live on these streams. All right, my goal is eventually to get to 100,000 members, right? 100,000 subscribers. And the only way we can do that is if we're all showing love together, we're all growing together, we're all benefiting together. All right, so definitely go ahead and show some love to all of our newest members in the chat, all of our newest subscribers. Right, everybody that's new that dropped the 3, I appreciate you guys so much. That boy Quentin, what's going on, Quentin? Welcome to the inner circle. Welcome to the wealthy fam. Definitely appreciate you, Quentin. Definitely go ahead and make sure to send me a message on Instagram so I can get you added into the private Telegram. Right, that's a great time to actually promote that. So family, all of you guys that are newer, all of you guys that have been rocking with me, if you guys do want to have access on a more in-depth, a more personal level to me, I do have a private Telegram with everybody that actually subscribes or chooses a membership here on YouTube. Right, we're about I think we're very close to now 100 members in that Telegram, and it's absolutely amazing to see. But that Telegram is absolutely next level, guys, because we're just having some crazy in-depth conversations, some next level conversations, and it's not just me in there providing value, but it's also a few of my trading buddies, my few trading mentors, but also even a lot of the community members are going next level with the value as well. Right, people that are in there are really talking good game, family. So make sure that you're in the inner circle chat, and the way you do that is by clicking on a membership through here on YouTube. Click on the join button that's next to the subscribe button, pick a membership, send me a message on Instagram, and I'll go ahead and get you added into that chat ASAP. Right, so just throwing that out there. But definitely I appreciate you, Quentin. Make sure to send me that Instagram message, bro, so we can get you added for sure. All right, but let's go ahead and get on with this, guys, because this is very important. I'm going to be honest. Like, understanding this in itself can really change the game for you. Just understanding this type of sentiment can change the game for you. Right now, before I actually break down what these type of sentiment is, I want to ask you guys, right? I want to make sure that everybody's actually paying attention. Now, I already know that there's going to be a bunch of you guys, and I could literally name you guys by name, the ones that already know this stuff, but you know, it's cool. I want you guys to be the teachers, you know, for everybody that's new tonight. So when we are in risk on sentiment, what does that actually mean, family? Right? When we are experiencing risk on sentiment, what does that actually mean? Who can answer this in the chat? Like I said, I already know of a few people that are already going to answer this, and you know, and I want you to answer it. I want you to be the teacher, right? Go ahead and educate everybody else on what risk on sentiment truly is. Let's see what we got here, right? Let's see what we got. Let me go ahead and catch up with the chats as well. Welcome to the family. Yep, exactly. Welcome to the family, everybody. Let's see. Definitely appreciate all you guys as well, family. That's you know, showing love to our newest members. It means a lot to me. Like, it really does mean a lot more than you guys might think, right? But when we are in risk on sentiment, what does that actually mean? Like, what is benefiting during risk on sentiment? There we go, C. Baker. Right, invest. Risk on means to invest. Upward trend technically for the indices. Yeah. Right, there we go, Kyle. Right, shout out to that boy Kyle. I knew Kyle was definitely going to be one of the ones that actually knew this. Right, risk on means you are willing to take on more riskier investments. That is probably the perfect definition of risk on sentiment. 100%. Let's see. Welcome to the threes. I can tell y'all I have studied with a lot of traders of the years. In my view, Abel is the most complete. I appreciate you, brother G. Definitely appreciate you so much. Right? Yeah, Oscar. Riskier plays. When risk on sentiment is on, when we are in risk on sentiment, that is time to actually go ahead and start taking some riskier plays. Okay? Let's see. Risk on means that you can allocate your assets variably. Right? You went for the textbook definition, but yeah, exactly. Right now, what assets, and I see a lot of you guys actually saying certain assets that actually are going to benefit during risk on, but I want you guys to understand exactly what this is. Right? So, Kyle, I'm going to ask you, Kyle, because I know you know for sure. During risk on sentiment, what assets or commodities or currencies are going to benefit during a risk on environment? Go ahead. I know for a fact Kyle knows this, right? Because like I said, Kyle always the first one to answer these things, right? So shout out to you, my brother. I appreciate you. But go ahead and answer this for the chat, family. If you know it as well, right? The assets that benefit during a risk-on environment, go ahead and drop it in the chat. But let me know in the chat, family. What does that mean? Let me know, right? Risk on, family. Risk on. Okay? Here we go, Shintaka. There we go, Shintaka. Risk on sentiment. People tend to invest in stocks and real estate. Remember, when risk on, and I see a lot of you guys are getting confused right now. Right? Don't get it confused. Don't get it confused, family. I see a lot of you guys are getting it confused right now. There's only a couple of y'all that actually said it the correct way. Do not let me. You know what? I'm going to actually go ahead and draw out. I'm going to draw exactly a good way to see this real quick, right? I'm going to draw a good way for you guys to identify this. Watch this, guys. I got y'all, right? I got y'all. Y'all are going to know exactly how to identify risk on and risk off once I go through what I'm about to go through for y'all. I got y'all. You know Abel got y'all back, right? I hope you guys do. Because this in itself, like understanding risk on, risk off sentiment can absolutely, in itself, can take your trade to 100 level. But I see a lot of you guys are getting it confused right now. So let's go ahead and break this down, right? Let's say that we have risk on at the top over here. Let's go ahead and make this smaller. That's a little too small. Let's go with a nice little 20 ball. I don't want no notes. Cancel that. All right, watch this, right? Risk on right here. Risk off on this side. And like I said, family, please take notes of this. Please take notes. This in itself can really change the game for you. So we have the risk on, we have the risk off. Right now over here on the side, we're going to have buy and sell. So we have buy up here, and we're going to have sell down here. Okay? Look at this. Right? Look at this. So when we are in a risk-on environment, we want to buy the riskier assets. When we are in risk-on, remember, which means, again, Kyle gave a really great definition of risk-on. All right, let me go back to his definition because it was absolutely fire, right? He said risk-ons means you are willing to take on more riskier investments. So when we're talking about risk-on, that means that you are comfortable because of the overall market conditions. You're comfortable with taking on more risk. So what assets benefit during risk-on sentiments? I actually got it up here on my whiteboard itself. We got stocks. We got crypto. We got, I'll just put commodities. I can't even spell. Commodities. And then we have certain currencies that are commodity currencies. So during risk on sentiment, these are the things that you want to buy. So if these are the things that you want to buy, then guess what we do on the flip side? We want to be selling US bonds, all right, because it's usually a safer asset. You want to sell gold. You want to sell the safe havens, USD, JPY, and Swiss. Pay attention. Who's paying? Drop a 3 if you're paying attention right now, family. Drop a 3 if you're paying attention. Okay. So that means for the flip side. Oh wait, I got this on the wrong side. Bow down here. So for risk on environment, you want to buy stocks, cryptos, commodities, the Australian dollar, New Zealand dollar, the Canadian dollar. If we are risk on, you want to sell the bonds, sell gold, sell the dollar, sell the Japanese yen, sell the Swiss franc. Now during risk off sentiment is literally the opposite. Risk off, you want to buy. Oops, I did this the wrong way. Right, take a screenshot of that little chart right there, of that little document. It is next level. Take a screenshot of that or write it down. I'm gonna leave it up real quick. So, are you guys with me? Keep on dropping those threes, family. I see we only got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 people out of 130 that dropped a 3. So that means we got to explain this a lot more. All right, I'm going to have to explain this a lot more. All right, I got to see more threes. I want to make sure everything is good. Shout out to that boy, Dada. Shout out to you. I appreciate you for being our newest subscriber. Welcome to the family. There's the threes. That's what I'm talking about. There we go. There's more threes. Because like I said, just understanding this in itself will absolutely change the game for you. And I'm going to break down even more, guys, on how you can even understand risk on and risk off sentiment as well. But I want you guys to understand this aspect right here. So now, let's break this down. When we are in risk on environment, we want to buy stocks, buy cryptos, buy commodities, and you can look into buying the Australian dollar, the New Zealand dollar, and the CAD because those are more so commodity currencies. But during risk-on environment, you also want to sell U.S. bonds because you're not going to get as good of a return on it. You want to sell gold. You want to sell the dollar, the Japanese yen, the Swiss franc. You want to sell those safe havens because now there's no reason to be storing your money in those safe havens when you can go ahead and invest it into an asset that's going to give you much larger returns. Like the stock market will give you a larger return than you actually investing into a U.S. bond. Right? You investing into crypto will give you a chance of a higher return instead of you just storing your money into fiat currency, which is not going to give you anything. When risk on environment is here, that is time to actually go ahead and get risky. Get risky. Invest your money. If we are risk off, see, now the flip side occurs. When we are a risk off environment, that's when you want to, that pretty much means like what we're experiencing right now. Right now we're experiencing a risk off environment. Why? Because we're dealing with literally 40-year high inflation. Because we're dealing with rising interest rates. Because we're dealing with a lot of uncertainty in these markets, a lot of fear and uncertainty, a lot of doubt in these markets. So whenever we have an economy, or whenever we have a situation, guys, where we're experiencing a lot of fear, uncertainty, and doubt, and we're seeing inflation going through the roofs, and we're seeing interest rates go through the roof, that is very risk-off-ish, right? That's not going to bring confidence to these investors and to these traders out there. So when we don't have confidence in the overall economy, we liquidate our riskier assets like stocks, cryptos, etc. And we go ahead and we pour it into something that's safer, like U.S. bonds, like gold, like the dollar. Is this making sense, family? Is this making sense? Drop some threes in the chat if this is making sense. Because again, this is what you need to know. This will change the game for you. Guaranteed it will. So, based on the current state of all the economies across the world, family, what type of sentiment would you guys say that we are experiencing right now? Are we experiencing risk on sentiment or risk off sentiment? Answer that in the chat. Are we experiencing risk on sentiment or risk off sentiment? I want to make this bigger so you guys can really see it. In my future voice, too much sauce, right? Let's see, devil's advocate question. What does commodities mean, right? A commodity is an asset that you can purchase, right? Like a commodity, just for example, purchase oil is a commodity. Right, like it's an actual tangible product that people utilize to, they use it in trade, right? So oil is a commodity. Soybeans is a commodity, right? Beans in itself is a commodity, right? There's so many different commodities out there. But yeah, that's pretty much what a commodity is, right? It's a tangible asset that is utilized in trade. So again, the question that I asked, though, family, is what environment are we experiencing right now? Are we seeing a lot of fear, uncertainty, and doubt? All right, let me go ahead and write this down as well, right? When we have, just so again, like I said, I'm very big on providing clarity, right? So risk on usually happens when there's optimism. How do I spell optimism? Optimism, right? Again, you don't have to be a freaking genius to really do this, right? When there's a lot of optimism, when there's a lot of hope, right? When there's a lot of, certainty in the markets, right? This is when you have risk on environments. When there's a lot of positive data coming out. Right? So if you see everybody excited, when you see that there's a lot of optimism in the markets and the economy, that means we're usually in a risk off environment. When we are in a risk-off environment is when we see fear, uncertainty, when we have doubt, when we have chaos, right? This is all risk-off. So again, I asked the question, right? And I see a lot of you guys answering, but I want to make sure that we have a lot of clarity here tonight. What are we experiencing right now with the state of the world that we're living in today? With inflation the way it is, with interest rates going up. Again, guys, you got to understand, interest rates going up is not a good thing for investors and for traders. Okay, it's not. So with interest rates going up, that causes a lot of fear in the markets, a lot of uncertainty in the markets, a lot of chaos in the markets, because now interest rates going up is now costing everything to. It's pretty much costing it to be more now. To get access to money is going to cost a lot more than it normally is if we're in a risk-on environment. So understand this. This in itself, like I said, will change the game for you guys. Now again, I want to ask you. I want to really check with y'all, right? Is this some sauce or nah? Because I know when I learned this right here, it took my trading to a whole nother level. And it's also the reason why I've been so bullish the dollar for the past 2 years now, past year and a half. Is literally because I now understand risk on, risk off sentiment. So if this is some sauce, guys, go ahead and drop a sauce in the chat. Just type sauce in the chat for me real quick. I want to make sure that you guys are gaining some value tonight, right? That's my goal every time I do these streams, right? It's to provide you guys with massive value. There we go. There we go. There we go. Okay. I like that. I like that a lot, right? Shout out to them soybeans. Yo, I remember like it was like 4 or 5 years ago probably now at this point, but that boy Skaggs had traded soybeans on MT4 and made a bag trading soybeans. Alright, shout out to that boy Skaggs, man. It's some hot sauce, right? Yep, exactly. Right, so again, you understand this, it will change the game. Now let's also go into it a little bit more. Alright, let's go into it a little bit more, because like I said, there's a lot to learn with this. And family, if again, this is why I gotta throw this out there. Right, this is why my 5-day boot camp, which is coming up in less than a month, is so important to be a part of. Because I literally break this stuff down inside of the boot camp, and I even go more in depth than just this inside of the boot camp. So family, if you want to improve your trading, then you have to be a part of the 5-day ProTrader Bootcamp that I have coming up August 15th through August 19th. That bootcamp is next level. I say that with confidence because I know what it really takes to become a profitable trader, and I know what a lot of people never actually get educated on in this space. So I want to be that trader that actually educates you guys on what's really important, not just freaking technical analysis, right? I mean, how many of you guys in the chart, and be honest with me, please, right? We're here, we're all family in this community, right? So be honest. How many of you guys in the chart or in the chat solely focus on technical analysis right now? Be honest with me. Or how many of you in the chat was only focused on technical analysis before you started coming to my streams? Now, you don't got to lie to me. I mean, you could lie to me. It is what it is, right? But don't lie to yourself neither. Right? Because I also was really focused on technicals a lot more than I was fundamentals and sentimental analysis. But this is what we have to understand. What creates the technicals is usually sentiment in the markets itself. The way that I trade now is completely different than how I traded 4 or 5 years ago. It's definitely different than how I traded when I started trading 7 years ago, 8 years ago. But the way that I approach the market now is that I approach the market, guys, from a fundamental and a sentimental perspective first. First things first, I have to understand sentiment in the market, and then I align my technicals with what my sentiment is overall saying and all that good stuff. Does that make sense? And just me doing that, it really changed the game for me. tremendously. Tremendously it did. Right? Me understanding sentiment and fundamentals, guys, has taken my trading to a whole nother level. So even if you are seeing success right now solely relying on technicals, shout out to you. That's absolutely amazing. But now it's time to take your trading up to another level. Now it's time to take your trading to a higher level, guys. If you want your trading to go up to the next level, just start to implement this sauce right here and watch what it does for you. I guarantee you it will change it for you. So let's see what else we got here, right? When do you send the email for the bootcamp? So I'm going to send another follow-up email, right? Just pretty much letting people know that. Because, again, guys, I'm going to be honest. Like, spots are, like I told you guys, there's only a certain amount of spots available for this bootcamp. And spots are filling up rather quickly, right? We still have pretty much almost just under 30 days for the bootcamp. But there's not that many seats available left, right? I said we were going to do 30. But that 30 is almost already taken, right? So now I'm going to literally set a hard limit. A hard limit on 50 people in this bootcamp. Only 50. Right? Because after this 50 and after this bootcamp, the price is going up. Because today's price is not going to be tomorrow's price. And the price for this bootcamp on August 15th is not going to be the same price for my next boot camp that I do probably sometime in November, December, right, to end the year. So I'm just saying, I raised the price, guys, literally from the first boot camp. The first boot camp was cheaper than this most recent one, but the price will continue to increase. Why? Because the value that I give will always continue to increase as well. Because as I do these boot camps, I'm always continuing to get better as well. I'm just saying. So 50 people is the hard limit. Don't play. Don't sleep. This boot camp will be the best boot camp that you have ever been a part of. And if it is not the best boot camp that you've ever been a part of, I would gladly refund you your money. That's how much confidence I have in this boot camp. That's how much confidence I have in the information that's going to be given. So go ahead and do your thing. Don't play yourself. Pay yourself, family. Just throwing that out there, right? But I will be sending another email on the bootcamp very, very shortly. But very simple, guys. If you guys filled out that form, at the bottom of the form, there's a way to actually go ahead and secure your spot. So make sure you do that ASAP. Don't play. Right, but let's see what else we got here. Before you, I focused on lagging indicators and relied on mentor signals. Yeah, right? I think we all been at that point, right? We were all there at one point. Let's see. It helped me so much, though, honestly, understanding this side more. Oh, yeah. It changed the game. Don't get me started with candlesticks, right? Yep. Me before coming to your streams, because I did understand fundamental and sentimental analysis. Yep. A lot of my analysis technicals, learned a lot about fundamentals plug-in here. Let's get it. That's what I like to hear. So risk off is when fear and uncertainty is prevalent for clarity. Exactly, right? When there is a lot of fear, and just another way to break this down as well, right? All right, when we start to see and now we're talking about, let's just talk about interest rates talking about real quick. Right? Interest rates going up, which is what are we experiencing right now, family? We are experiencing interest rates that are going higher and higher. In fact, we have our interest rate decision over here for the U.S. very, very soon. Like, very, very soon, right? I believe is it next week? Is it next week? And if it's not next week, I believe it's the week after that, right? But we have our interest rate decision, guys, coming up. I think it actually might be next month. But we have it coming up soon for over here in the U.S., right, with the Fed. Don't be surprised if they actually raise rates a full 100 basis points, right, or a full 1%. That's going to shake the markets. That's going to shake the markets, right? But as of right now, guys, again, we are seeing interest rates going up. Interest rates can also mean that we are now heading into a risk-off environment. Right now, if we see the flip side to that, and we see interest rates going down, then us looking at interest rates becoming cheaper or interest rates going down, then that in itself can also lead to a risk-on environment. Okay? Interest rates going up is telling people to stop spending. Interest rates going down is now telling people like, yo, go ahead and start spending more money. Spend into those assets. Take riskier chances, riskier plays. Because when interest rates go up, it's now harder to get access to capital. But when interest rates are going down, now capital is going to be thrown at you. It's going to be super easy to get access to capital. And when there's an ease, and when it's easy to get access to capital, that is the time to go ahead and invest into stocks. Guys, I mean, look at what we had just went through the past few years, right? COVID. Let's talk about this real quick. This is very important, right? COVID. What did COVID do? Right? COVID initially brought a lot of fear, uncertainty, and doubts in the market. Right? It brought a lot of chaos. But what COVID also did, which also, we had very low interest rates as well during COVID. They actually started spiking interest rates in 2018, 2019, but then they ended up stopping and actually reversed it because of Trump. Trump is like, no way, you got to stop raising these interest rates. And if you continue raising these interest rates, Jerome Powell, you're going to be fired, right? I don't even know if Trump can actually fire Jerome Powell. But that was pretty much the threat that he gave him, right? So, the Fed actually did a U-turn because Trump applied pressure, right? So interest rates started going back down. So now we're talking about, because of COVID, we were dealing with so much printing that was occurring, so much money that was being added into the markets, so much money that was being added into the economy, with low interest rates and how easy it was to get money. That's exactly why we're seeing inflation go through the roof right now. But because we also seen people have access to so much money and interest rates were so low, that's also why we seen, guys, these asset markets absolutely go crazy. That's why we seen the housing market explode, because the demand for housing was through the roof because everybody had money. That's why we seen gold go through the roof. That's why we seen all these different assets, guys, go through the roof because everybody had money, because the Fed and the government was giving out money for free. Let me see. I'm going in, family. I don't know. My OBS just restarted real quick. Give me 1 second, right? Drop a 3 in the chat. Drop a 3 in the chat if you guys can hear me. It seems like when I get in my zone, when I got that tunnel vision and I'm just focused on what I want to teach, OBS, the software that I'm using, always want to try to shut us down. But we still going, family. But man, are you guys getting some value tonight? Yes or no? Drop a yes or a no in the chat. And if you're not getting no value, then I kindly encourage you to say no, because that means I got to turn it up even more. That means I got to turn it up even more. But let's go back to talk what we were talking about, right? So again, because of everything that we happened, because of how much money was being given to everybody, because also all this money was being given while interest rates were historically low, that is what caused everybody to go ahead and start spending, because everybody had access to so much capital. But because of that, it caused a bidding war for every single asset across the world. That's why housing went through the roof. That's why cars went through the roof. That's why eating food went through the roof. That's why the price of everything went through the freaking roof. Because access to money was so easy right after COVID was announced. But now we're literally feeling the after effects of that entire COVID period. We're feeling it right now. Where now they're raising interest rates because they don't want to make it as easy, as accessible as it was. Right now we're paying 10% more. Right? The price of everything went up by 10% year over year. The price of goods and services went up by 10% because everybody was buying, spending. So now they have to try to reverse it. So that's exactly why, guys, we're now in a risk-off environment. Because of what the Fed is doing is causing people to now sit on their cash. People don't want to go ahead and spend money. People don't want to go ahead and do that. You know what's crazy? Right, actually, and let's talk about housing real quick, right? Just real quick, just for use it as an example. 2 years ago, right? I actually see my brother Patrick Kenny, right? Shout out to that boy Patrick Kenny. Definitely somebody that I learned a lot of fundamentals from. Right? But 2 years ago, a 30-year mortgage, right? I'm definitely spelling mortgage wrong. All right, let me actually bring it up, because I want to make sure I'm giving you guys real value, right? So let me go ahead and bring this up real quick. This is some sauce. All right, so 2 years ago, guys, a 30-year mortgage rate was 2.9%. Okay? Today, the 30-year mortgage rate is 5.71%. Right? So the mortgage rate literally doubled, right? But now let's also bring in the median price of housing, right? The median price in housing back in 2000 or 2 years ago was also around just shy of 300K, so around 249,000. Right? The median price for houses now right, is around 416K. The median price. Now, what does this mean? Right, with a 20% down payment. I know this is really not related to trading, but it really kind of really is, right? Because it's related to the economy, and the economy is what's really dictating, overall, what these currencies are doing, right? So with a 20% down payment, that's a 98% increase in the monthly payment for your mortgage. Right, going from, and I want to write this out so you guys can see it visually, from $978 a month to $1,900 a month. Let me show you guys. Maybe I gotta make this bigger for y'all. All right, let me say this one more time, guys, because this is crazy. 2 years ago, a 30-year mortgage rate was 2.9%, and the median price for houses was $294,000. But because of COVID and how the Federal Reserve reacted to COVID and how much money they gave to people, it actually made the prices of houses go through the roof. Like, guys, a year ago, in order for you to actually buy a house, you're paying 10, 20, 30%, 40% over asking price, because there was not enough houses available for the demand that there was, because interest rates were extremely low. Mortgage rates were extremely low. So everybody wanted to buy a house a year ago, 2 years ago. But now, since we started to increase interest rates this year, the actual mortgage rate went from 2.9% to now is sitting at 5.7% currently right now. And the median price of houses is $400,000. So if you put 20% down, now your mortgage rate is you're gonna be paying almost $2,000 a month, guys. That is insane. But this just really breaks down, guys, exactly what COVID actually did, what the Federal Reserve's response to COVID, what it actually did. They caused this inflation to be here. The Federal Reserve caused this all to occur, because they were making money so easily to have. This is nuts. Now think about it. For anybody that got a mortgage, say a couple years ago, and it wasn't a fixed rate mortgage, where it was more a variable, which it pretty much depended on what mortgage rates went. Guys, if you're going from paying just under $1,000 a month in mortgage to now having to pay just under $2,000 a month, is that a big difference, yes or no? Is that going to affect you and your household, yes or no? Let me know in the chats. Obviously, if you're rich, it is what it is, right? But for people that are middle class, lower class, seeing their actual mortgage rate increase because they did not actually have a fixed mortgage rate. They had a variable mortgage rate. So them seeing that increase and now them going from paying $1,000 a month in mortgage to now paying $2,000 in mortgage, that is drastic. That is going to affect a lot of households. That is exactly what we're seeing right now, which is why if we also look at the data that just came out today with existing home sales, right, which again, let's actually bring this up so we know exactly what this measures. Right, existing home sales measures the change in the annualized numbers of existing residential buildings that were sold during the previous month. Right, so if we look at this report now, because obviously everything that we're just talking about, there are less and less houses actually being sold. Why? Because nobody wants to buy a house and pay 5% mortgage rate. Because now they know that their actual monthly mortgage is actually going to be extremely expensive compared to what it just was a couple years ago. Look at this. Look at the actual chart. We're seeing literally a decrease in numbers of houses being sold every single month. But also, you got to understand what this is also going to lead to. And this is why I've been talking to you guys about the Fed dropping the ball. Because now, because of this, now there's going to be a lot of homeowners that are not going to be able to afford their new mortgage rate. Yeah, you can try to refinance, but again, refinancing right now, it's going to be extremely, extremely hard because, again, the banks are going to be becoming a lot more stricter now because of everything that's going on. But you got to understand, a lot of homeowners are not going to be able to afford this. And if they're not able to afford their mortgage, then what comes after that? Now they're going to probably end up having to get foreclosed on. And they're going to have to be homeless. So guys, this whole situation with COVID, this whole situation with everything that's going on is absolutely going to affect a lot of people. Right, but now let's go ahead and bring it back to currencies, right? Because I know that this is a trading call, right? And we're dealing with currencies, right? I hope you guys got this right here, risk on, risk off, very important, right? But I want to go ahead and also give you guys some more examples now in terms of from a currency perspective. Just so you guys can see really where how this really plays out, right? Look at this. So, what have we been experiencing lately in terms of currencies? Dollar strength. When the dollar gets stronger, that causes other currencies to become weaker, to become cheaper compared to the dollar. If we're looking at, say, the euro, for example, right? The euro, for example, if we're looking at the euro, guys, let's just say the beginning of this year, right? The beginning of this year, 1 euro or one USD was equivalent to $1.23 in euro, or not a dollar, but €1.23. So when the euro was up here against the dollar, right? Certain people, certain businesses, they were able to obviously, purchase, certain assets, certain commodities, certain household goods, whatever the case may be, at a decent price. But now, since price of the euro has absolutely collapsed by 20 cents, now that is pretty much meaning that it's now going to cost more. It's going to cost the consumers more of their money to actually operate if they want to do things that are going to involve US dollars, right? Like a lot of these assets and these commodities, guys, that are traded across seas, it's all usually done in the US dollar. So for an example, if a business, and I'm just going to use a random example, let's just say, let's just use a random commodity, right? Let's use cattle, right? Let's say I wanted to purchase cattle. Okay? If I wanted to purchase cattle and my home currency is the euro and I wanted to purchase cattle, but in order for me to purchase cattle, I have to convert the euro into USD so that I can actually make the transaction go through, right? Shout out to that boy Skaggs, I appreciate you, brother. But a Starbucks coffee, I'm gonna be honest, bro, and I don't mean to sound greedy. I'm only doing this just because it's you. But a Starbucks coffee, bro, is $6. Like, my Starbucks coffee every morning is $6. Like, I don't know about y'all. They're a little off topic, guys, but like, I spend $150 a week in Starbucks. That is not a healthy addiction whatsoever. It's not like, so I don't know, Skaggs. I'm just saying. You might have to throw a couple more dollars on that soup. No, I'm just messing with you. All right, but overall, guys, let's get back to it, right? So if I wanted to purchase cattle, I would now have to convert the euro into the US dollar in order for me to do that transaction, especially if I'm getting it from a foreign country. So if I was purchasing cattle back in the beginning of this year, and say, you know, the cattle was $1,000, right? $1,000. I will put up 1,000. Let's say 1,000 euros. 1,000 euros in the beginning of the year, right, to buy cattle. Okay. But now, since the value of the euro has decreased, if I wanted to buy that same exact cattle now it's probably going to cost me $1,100 or 1,100 euros to buy that cattle, because the value of the euro has decreased against the dollar. So now when we convert it into USD, we are now getting less USD in return in order for us to purchase that asset or that commodity. So what we're experiencing right now, guys, is literally what a lot of businesses and corporations across the world are literally experiencing. The same exact scenario that I'm giving you guys right now with the euro and me buying cattle is a real life example of what's actually occurring, which is right now is going to cause massive disruption in global trade. Again, this is some next level sauce, right? Yo, that's what I'm saying. The bootcamp family, like, if you guys are not part of bootcamp, man, the link to actually join the bootcamp family, by the way, is right in the chat, in the description of this video, in literally down below, right under this video, guys, in the actual description bar. The first thing in the description is going to be a form that you have to fill out for the bootcamp, and at the end of that form is a way to go ahead and secure your spot. Just throwing it out there, right? But this is sauce that we provide in the bootcamp, right? I'm just giving it to you guys tonight because I want y'all to really understand, like, yo, there's a lot going on in this world. But back in the beginning of this year, you could buy cattle for 1,000 euros. Now, because the price of the euros has fell against the dollar, now it's going to cost us 1,100 euros to actually buy the same exact cattle. Use that same example, guys, for how everything is occurring across the world. So now when businesses are doing, or countries doing businesses with each other, or a business in the U.S. is doing business with a country in Europe, and a business in another foreign country is doing business with another foreign country, and they have to convert it to the actual USD, now it's costing a lot more, right, to actually do business, because now they're not getting as much as they were in the past. So yeah, the US dollar as a whole is, you know, that's, I'm not going to say it's a good thing for us over here in the US, but it's definitely not a good thing for other countries that have to convert that into Forex market. So I'm just saying. I'm just saying, guys, right? Next level information right here. Next level information, right? But overall, let's go ahead and get into the charts now, right? Because I know I've been doing a lot of ranting, and it's very important for us to have these rants. But what do I think is going to happen now, guys, in the Forex markets? All right, let's go ahead and get back to actually looking at what we can potentially expect, right? So there's going to be a few things, guys, that I'm going to be looking for. So yesterday when we were looking at the euro, I did tell you guys what? I mean, I told you guys that the market was mostly going to end up breaking this support. Why? Because everybody was going to fall for the trap. A lot of liquidity was built up below this level. And what did price do? Price did exactly what I expected it to, right? It actually came down, it broke that support, and it stopped everybody out that was buying prematurely. So now what do we think price can do next? Well, I'm very interested, guys, in seeing how price reacts around this demand zone down here. All right, I'm going to go a little bit quicker now, too, because obviously I just spent a lot of time just ranting. I'm not sure if you guys enjoy those rants, and if you guys enjoy those, you know, those educational pieces, those educational talks. I know a lot of you guys come on here strictly for the signals or the ideas. You guys just want to get paid, and I get it. But I'm all about really just doing education, right? So if you guys do enjoy those little rants or those educational little outbursts that I give, definitely go ahead and let me know in the chat, guys, and I'll continue doing them. But overall, like I said, I'm very interested in seeing exactly how we react around this demand zone. You know, because there is a chance, guys, for price. I think. Right, I do think that we still have some upside. Right, I do think that we might have some upside, guys, still for the euro. Right, I would love to see the euro ultimately go ahead and enter this area right here, this imbalance, this fair value gap, right? This price inefficiency zone, whatever you want to call it, right? I'm actually going to highlight it so you guys can see it a little bit better. And I'm also going to type imbalance, right? FVG for fair value gap, right? Price inefficiency zone, right? All them good stuff, right? I'm just going to use imbalance and FVG, right? But I do think that there is a chance, guys, for price to actually go ahead and make its way up there, right? To go ahead and fill, you know, this area of imbalance right up. Now, guess what I'm going to do, though, right? If price is able to go ahead and get up there, right, up into this area, which I do believe it can, right? Because, you know, again, another word that people like to say now is look at all this clean traffic, right? It's straight shot down. A lot of clean traffic that will probably get erased. So what I am thinking is that if we are able to see price now go up into that level, which I think is what's probably going to happen, right? This is where we really want to start looking for opportunities now to look for some shorts to go ahead and get back into the overall trend as a whole, right? Because overall, guys, we are still very much bearish in this market, right? Look at this. Very, very much bearish, right? This market has just been continually dropping. And again, if sentiment doesn't change, stay with the trend. Right, so overall, I do believe we're still going to see a lot more downside, but I really want to see price come up into this area. You know, if we're able to see price come back up into this level of structure right up in here, that will be pretty juicy, pretty fire for sure. You know, but that's pretty much my bias, guys, going into tonight, going into tomorrow, is I really want to see price go ahead and make its way up here. Now, what does that mean if we're looking for an opportunity going into tonight? Well, again, I initially wanted to see price come down into this demand zone, and there's still a chance for price to come down into here, right? There is, but just looking how price is reacting right now, I'm not sure if we will, right? Because I mean, look at this level of structure that we have here, right? Level of resistance, level of support, numerous times, level of support. Now price is acting as resistance, and then price pretty much just broke right through that level. So guess what? The same exact area, guys, that we have evidence of it acting as a key level in the past can now be utilized as an area to go ahead and enter to continue this thing move higher. Okay, so that's what I believe we can see now going into tonight and tomorrow. I would be very, very comfortable looking for an opportunity to go ahead and go long something like this. This is not a bad play here, guys. All right, my stop loss, I really want to keep my stop loss probably below this low down here just to be safe. Again, you know, like I said, guys, we do got to be mindful. Price could always run down to these lows down here, this last level of structure before market really shot up. But I'm really just betting on the fact that this level right here, since we had enough momentum to break back above it, I'm betting on now that the demand for the euro is actually going to continue to increase and at least bring us higher off of that level. So that's going to be my bet going into tonight, right? Is that this level holds right here, and that we do see more upside to the upside, okay? So that's what I'm going to be paying attention to, right? Again, that's not a bad opportunity. I would comfortably risk 2% all day long, guys, on an opportunity like this for the euro, because we have evidence of structure being broken, evidence of a lot of momentum coming in. So there's a chance for price to come here and then go ahead and continue its dominance higher. So that's overall what I'm going to be looking for going into the euro. I'll probably be targeting, if I am able to get an entry, I'll probably be targeting initially probably just right up to this little area of supply that we have right here. So probably target maybe around 100, 120 pips or so. So if my stops is below this swing low down here, we're talking about 38 pip stop to go for around 120 pip target. That's a good 3-to-1 risk to reward. That is not bad. Now, if you wanted to say, you know, make it a little bit tighter for whatever reason that you have, again, you got to have a logical reason if you're going to be making it a tighter stop. But if you did want to do a tighter stop as well, because you believe that the market is going to react off of this level and it shouldn't break this, you know, this swing low right here, then you could possibly have a much tighter stop of around maybe 16, 17, 18 pips, which also is going to make the risk to reward even much juicier. Okay, so that's just an opportunity, guys, I'm going to be looking at, you know, for the euro going into tonight. But I do want to see more upside, personally speaking. All right, that's just really my prediction overall. Let's go ahead and take a look at a few of these guys. Now, again, I'm not going to take a look at all of these, but I am going to take a look at a few of them. I'll go straight to GU, all right, because GU as well is also I like GU. I like trading GU a lot, right? Just, you know, one of my favorite pairs as well. Right, so overall, guys, we did see price pretty much give us a nice reaction off of this key level of structure right here. And we are now starting to see price move from this level, and we did see a nice little break of structure. So if we're able to see a nice little pullback in this market, then we might be able to go ahead and look for some long opportunities. Right, where can we look for some long opportunities from? Well, if we see price come back down to, say, this level right here in the 5-minute, I would be comfortable taking a buy off of this little small demand zone right here. I would be comfortable with that. Right? I would be very comfortable with that, right? So if, again, the keyword here is if we're able to see price come down here, that's where I would be, you know, looking for some opportunities to go ahead and go long here, guys, for the pound dollar itself. You know, and then we could potentially target, you know, this level of supply, this major level right here, right? And then we can even potentially target back all the way up to levels of structure even higher. All right, so we have a few different levels of structure, guys, and we're talking about, like, this is going to be some good looking trades because the risk to reward is going to be absolutely phenomenal. Absolutely phenomenal, right? So we're risking maybe 9. I mean, if you want to put your stop loss outside of the range, you can do that for around maybe 17 pips. Target 75. That's a 4.5 to 1, right? And that's just off structure off the 5-minute. If we really go to the bigger time frame, right? See, now there's a chance that we even target even higher, maybe all the way up to this area of supply up here, right? Because when we're trading, guys, especially me, where I leverage supply and demand levels tremendously now, right? If I'm entering at a strong level of demand, I'm targeting levels of supply to go ahead and get out of these trades, right? So I'm entering at demand in a buy situation, and I'm targeting supply to get out. That's it, right? So that's what I'm gonna be looking for. So if we do this, now this is a crazy setup. We're talking about 7.5 to 1 risk to reward, risking 17 pips to go for 130. That is gonna get you like a nice big bag, right? If you're able to go ahead and get it. But I like this opportunity, guys. So looking for a buy down here at around 1.197. It doesn't look too bad, guys, for a pound dollar. Now, if I lose on it, I don't care. It is what it is. It's a part of the process. It's a part of the game. And I say that all the time because it's important for us to understand, guys, that losses are inevitable and you're going to take them. All right, again, I'm the trader, guys, where I don't shy away from my losses. If I get a loss, I'm not going to try to avoid the fact that I took a loss. No, that's a learning lesson. That's a teaching lesson for everybody, including myself. But not even just that, right? Me as a mentor, and this is one thing that I really don't like about certain mentors and educators out there, right? Like, if you consider yourself a mentor, then stop trying to act like everything is sunshines and rainbows, right? Stop trying to act like you don't lose. That pisses me off. Why does it piss me off? Because you as a mentor, is your job to actually be relatable to the people that you're actually trying to teach. And your job to be relatable is to talk on the stuff that is going to relate to what they're experiencing. And it's a fact that most traders right now are experiencing probably a ton of losses. So if you experience a loss, why don't you take that opportunity to actually go ahead and talk on that loss and be relatable to your students instead of trying to act like a god, because you're not a god. Again, I'm sorry, that's just another little rant, but that's me, guys, right? I like to try to be as relatable as possible. So when I take a loss, I love talking on that loss. Why? Because now it gives you guys confidence to be like, yo, Abel's a dope ass trader. Abel's living off of Forex. Abel does this shit full time and he's taking losses, but yet he's still able to do it. So man, that gives me hope, even though I'm experiencing losses, that I will eventually also still be able to do it, even with the losses that I'm experiencing. It's all a mindset thing, guys. And I think that's why I've been able to get so much love and so much, I've been able to build my credibility the way that it has, because of the way that I approach these things, right? So that's just me, right? I just can't stand people that only show the wins. Like, my boy, you like, show them losses too, my boy. It's actually gonna do a lot more good than you think. But overall, that's what it looks like for GU, guys. Let's go take a look at UJ. Right, UJ, absolute. Oh my goodness, look at this trade. Right, this is something that we actually called out last week. Right, last week I gave you guys this setup. Like, I kid you not. Last week I told you guys I wanted to see price come down to this area right here, and then for price to actually go ahead and start rebounding. And we seen price do just that. Absolutely crazy. Now, what can we expect for UJ now, right? Well, for some reason, there's a lot of volatility. Was there? Yeah, okay, there is news, right? The Bank of Japan their outlook report, and they actually are having a press conference right now. So please be mindful of the yen pairs, guys. There are going to be a lot of volatility. They're going to be extremely volatile tonight because obviously of the press conference that's going on, right? But overall, I'm bullish on this, right? Like, I'm still very much bullish, guys, on these yen pairs, right? Until they actually, like, officially start to do something and act, right? Because the Bank of Japan, guys, like, they're just, like, they're being very, very passive, right? Let's see. Their interest rates came out. Let me see. Did they come out? Let me see. Let me see if I could. Let me see. Am I missing their interest rates? Because if they actually started raising rates, then that's probably going to bring some strength. Oh, it did come out. And they didn't do a damn thing, bro. Like, it did come out and they didn't do a damn thing. Like, this is what I'm talking about, guys, right? Like, again, the Bank of Japan right now, like, they're not doing nothing at all to try to combat inflation, to try to combat all these things, all these factors that's affecting every single economy across the world. They just clearly do not care, and they're still being very, very passive, right? They're still printing money. They're still doing all the things that a lot of these other central banks are doing the opposite of. So that in itself, in my opinion, is just going to continue to make the yen that much weaker. I'm expecting yen weakness to absolutely continue to come through. Because if we look at the dollar, look at this right here on the daily. The reason why this has been absolutely flying is because the Japanese yen has just been getting extremely, extremely, extremely weak. And the Bank of Japan is doing nothing to try to help their currency rebound. Like, at all. So I don't see that slowing down. I'm still very much bullish USD/JPY. I'm still very much bullish GBPJPY. I'm still very much bullish AUD/JPY. Shoot, NZD/JPY. I'm still very much bullish EURO/JPY. Anything against the yen, in my opinion, it's just going to be bullish. The only thing that might be more so sideways is going to be probably the Swiss, right? Because the Swiss itself, although they did raise rates a little bit, the Swiss on their last report, they're also a little bit, yeah, they're also still a little bit behind the ball. But at least they're acting a lot more aggressive than the Bank of Japan is. All right, so overall, guys, like, even if we do for whatever reason see like a short-term little pullback, I'm buying this, right? Like, I'm buying this. In fact, like, I would love to see price come back down to this level right here. If we see price come back down to here, to this demand zone, guys, right at around the 137.7 level, like, if price comes back down there, I'm throwing 10 lots. Like, I'm throwing 10 lots on that bad boy. No questions asked. I'm throwing 10 lots. All right, and I'm going to be riding it out just like this. Targeting right back up to the upside. That's just my opinion, right? That's just me, right? There's actually such a thing, guys, as an interest rate differential. And understanding how interest rate differentials work, it can absolutely change the game for you as well. But yeah, this is actually not a bad setup though, guys. All right, if we're able to see price come to this 137.7 level, that's a great opportunity to go ahead and continue buying USD/JPY all day long. I'm actually going to be watching this one tonight. Keep that one on my radar. Let's go ahead and take a look at gold, right? And see what we got going on for gold, guys. So again, yesterday I gave you guys an outlook on gold. I told you guys that I wanted to see gold pretty much come down to this 16. I mean, the 1690 levels is what the dude that I forgot who it was on the stream, but they said that they wanted to see price come to the 1690, and I agreed, right? That price does have a very good chance of coming to the 1690, and I do believe that there's still a very good chance, guys, for gold to see some downside, but right, we do have momentum really starting to slow down, guys, for gold. Right, we're inside of this bigger range overall, right? But we are seeing as well even price start to slow down. So I believe, yeah, long term we're still going to see more bearish side, more downside pressure, guys, for pound yen. But it looks like we could realistically possibly see, guys, a nice little spike to the upside for the for gold itself going into tonight. And again, I could be wrong. And if I'm wrong, it is what it is, right? But I could be wrong. But I'm leaning towards maybe a possible shift higher. So what I'm gonna be looking for going into tonight, if we're able to break above this level right here of structure, right, this 1693 level, I'm literally gonna be waiting for this. I'm not taking no trade unless we break above 1693, and then from there I look for a retest to go ahead and ride this thing higher. So that's gonna be my outlook, guys, for gold going into tonight. Is something like that. A scenario and a play like that will be pretty juicy. All right, so that's my gold overall. If we don't get that break to the upside, then I'm just going to be on the sidelines chilling. All right, so overall, let's see what else we got here for GJ. Again, GJ, just like dollar yen, I do expect this thing to possibly continue its trend higher. Let's just see where we're at. I mean, we're at a very interesting level of structure as well. Like, we actually could just continue going higher, guys, right? Like, I could really see this thing just continuing to increase from these levels for, you know, pound yen. So if we see price possibly come back down into this structure level right here, you know, that can be an opportunity, guys, to really go ahead and continue buying it up, because I really do like the opportunities to buy for sure. Right, but overall though, family, you know, again, I appreciate you guys. I know I went on a complete rambling rant. It's a lot of value in those rants, but I definitely went on a complete rambling rant, and I'm honestly out of a lot of energy right now. Right, because these streams they take a lot of energy out of you, right? Especially if you're as, you know, animated like I am and as dramatic like I am. Like, I be having to take a shower after these streams, right? So, family, I'm going to call it a night. I appreciate you guys. I love you guys for rocking with me tonight. I will be back on tomorrow once again, right? So we can go ahead and finish out the week strong. Please, if you're serious about your trading journey, if you really want to take your trading to a whole nother level, make sure to be a part of this boot camp. It will be by far the best boot camp that you are ever a part of. I guarantee that. Guaranteed. Right, so if you're serious about your trading journey, at the in the description of this video, the first link is going to be a Google form that you have to fill out to actually get access to the bootcamp. You fill it out. At the bottom of the form, there's a way to go ahead and secure your spot in the bootcamp. Make sure to do that ASAP so that you do not lose out on this, because it will be money well spent. Guys, especially right now, with us now being in a recession, it's more important now than ever to really learn a valuable skill set that's going to allow you to profit during times of chaos. And trading can be that thing for you. It could be that avenue, but it's all about really taking it serious and investing into your future. So, family, I appreciate you guys. I love y'all. Thank you guys for rocking with me tonight, and I'll see you guys again in the chat if you're in the inner circle chat. And if you're not in the inner circle chat, I'll see you guys again back here tomorrow. I love you guys. I appreciate y'all. And I'll see you guys later. Let's get it.